Hello ladies and gentlemen, I'm Steven with WatchGuard Capital, and in this video I'm going to show you how to select the first long-term investment for your portfolio or account, and then after that you can use it as a benchmark to compare any investment in the future against. Finviz.com is a great starting point. Since this is a core position, we're going to rule out all leveraged, inverse, sector, style and strategy, international, bond, commodity, small and mid-cap investments. Which leaves us this block of exchange-traded funds, or ETFs, which all hold underlying shares of U.S. companies. VTI and ITOT are total stock market indexes, meaning they contain shares of thousands of U.S. companies inside them. The Triple Qs tracks the NASDAQ 100 index and contains the largest 100 companies traded on the NASDAQ exchange. SPY, VOO, and IVV are all S&P 500 index ETFs, which means they contain the top 500 largest companies in the U.S. by size or market cap. DIA tracks the Dow Jones Industrial Average and has 30 stocks in it. RSP is the S&P 500 Equal Weight ETF. The underlying holdings of these investments are not performance weighted, so let's get rid of them. There are some absolutely great investments in this group, but for simplicity's sake, let's get rid of them for now. And IWB tracks the Russell 1000, which is somewhere between the total stock market and the S&P 500 indexes, which is not differentiated enough, so let's eliminate it. Let's also eliminate all the redundant investments, and we are left with VTI, SPY, and the Triple Qs. VTI is the Vanguard Total Stock Market ETF and has an extremely low expense ratio of 0.03%. SPY is the State Street Spider S&P 500 ETF. It was the first ETF ever listed on an exchange. The Triple Qs is the Invesco NASDAQ 100 index and is overweight technology stocks. Let's check performance using Portfolio Visualizer's Backtest Portfolio tool. I set the date range from 2006 forward. Portfolio 1 is 100% VTI, Portfolio 2 is 100% SPY, and Portfolio 3 is 100% the Triple Qs. VTI and SPY had compounded annual growth rates of 11% and standard deviations of 15%. The Triple Qs had a compounded annual growth rate of 16% and a standard deviation of 17% over that time period. And here are the actual annual returns and lines showing those compounded annual growth rates. And now you have 3 core investments to start your portfolio and use as benchmarks in the future. I'm Steven with WatchGuard Capital. Invest your time wisely.